Jim Cramer said something about the Silicon Valley Bank, and now he's getting absolutely grilled. Jim Cramer, the host of CNBC's Mad Money, has urged his viewers to invest in Silicon Valley Bank, and that has resulted in problems for everyone who invested in it. In today's video, we are going to discuss why everyone is mad at him for saying it, and we plan to give the context of all of this. If you're excited to watch today's video, please leave a like on the video as it massively helps the algorithm. Alright, let's get right into it. Jim Cramer. Before we go and discuss what this man said, we will give you a picture of who this guy is. Jim Cramer was a man that entered this world on the 10th of February in 1955 in the suburbs of Philadelphia to Jewish parents. He is now an American television personality and author. He used to be a hedge fund manager, and yes, as you might have guessed, he is the host of Mad Money on CNBC. He's a graduate of Harvard Law School and worked for Goldman Sachs. He has also tried a fair hand at writing books, including the first book that he wrote in 2002 called The Confessions of a Street Addict. He has had multiple media appearances, which were mostly on shows for CNBC. He has also appeared in movies such as Iron Man, and he was consulted for the original Wall Street movie. Who knew this guy had done so much? What he said, Jim Cramer advised his audience that buying stocks of the Silicon Valley Bank, or SVB for short, was a smart move. Many fell for this and bought this. This is what he exactly said. This company is a merchant bank with a deposit base that Wall Street has mistakenly been concerned by. Then he went on to add, the bank was less dependent upon private equity and venture capital offerings. He then said that the stock was still cheap. Technically, he didn't directly tell people to buy stocks, but he did kind of hint to the ordinary people watching him on television. What most people don't understand is that he is a former hedge fund manager, and this is what I mean by that. A simple explanation of the stock market. The stock market is where people buy and sell shares. What a lot of stock market experts do is build hype over a stock that they own. Let's say, for example, Steve owns stock in the Silicon Valley Bank. Steve starts to build hype around the stock of the bank, and he can easily do that since he has an audience. All he has to do is just hint that the Silicon Valley Bank stock is worth buying, and most of his audience, who feel like they just got a secret message, go and dump their savings into that stock. They are hoping that this stock will increase in value over time, and they can get a return out of it. That's the plan. But what happens when everyone who watches Steve buys the same stock? The value of SVB stock drastically increases since a lot of people want to buy the stock at the same time. So SVB stock will skyrocket in value for a short period. Steve takes advantage of this and sells all of his stock at this price and walks away with his capital gains. Why would Steve do this? It's because he knows that the SVB stock will plummet in the next few months and he wants out. This is obviously illegal and should never be done by anyone. But that doesn't stop people from doing it, and it's also very hard to prove in court. We are not accusing Jim of doing this, but it's just for you to know that things like this happen, and we just want you to be careful. It is quite funny how Jim calls SVB the biggest winners of 2023 so far. What happened to Silicon Valley Bank? All the bank accounts in the Silicon Valley Bank were owned by startups and venture-backed firms. They didn't have normal clients. So all the bank accounts had millions of dollars in them. The bank first went public in 1988 and eventually became one of the largest commercial banks in the United States. A lot of its growth came during the pandemic and ended up even tripling in size after the pandemic. It was now the 16th largest bank in the United States before it crashed. That is. You're probably wondering, so if it grew so fast, why would it fail? What's the reason behind it? Well, its quick growth was partially the reason behind its failure too. Let me explain. When it tripled in size, the bank received a huge amount of deposits and assets. Most of these assets weren't held in cash by the bank. The banks never do that. Instead, they invested it in treasury bonds and long-term assets, which were pretty much like treasury bonds. A thing about treasury bonds and these long-term assets is that they bring in a low return, but they are also very low risk. You will almost definitely get that return even though it might not be much. This isn't the problem either, since banks do this all the time as well. But then the feds increase the interest rate to combat high inflation rates, and this is where everything went wrong. I'm not going to explain the mechanism behind it, but, long story short, the investments that Silicon Valley Bank bought became worthless just like that. The bank was planning to sell its treasury bonds and its other assets for a higher price than it bought them for. But what happens when no one wants to buy them anymore? That's how it became worthless. Since inflation hit record highs and most of the bank's customers were companies, this is another issue that came up. The companies start having money problems and started withdrawing money overnight from the bank. Silicon Valley Bank didn't have cash in its possession to facilitate all the withdrawals. So they ended up selling the assets they bought at a loss. Oh boy, they lost a lot of money on that. $1.8 billion to be precise. On March 8, the bank announced its loss of $1.8 billion, and on March 9 the stock crashed at the market opening. This turned out to be a bigger problem since other banks also took a hit in the stock market and ordinary people started withdrawing money from their local banks to keep it safe. On March 17th, Silicon Valley Bank's parent company filed for bankruptcy. What about the people? There is a law in the United States that protects everyone's deposits up to $250,000. But almost every bank account in SVB had more than that. Since everyone in America was starting to lose trust in the banking system, the Federal Reserve publicly announced that every account in the Silicon Valley Bank will be paid back whole. It's unfortunate for the investors. They aren't going to get bailed out from this. If everyone else in America went to their local bank and withdrew pretty much everything they had, every bank in the country would go bankrupt just like this one did. The trust that people have in this system is actually just as important as having money. Because, just imagine, if every single bank went bankrupt in America, the entire economy would fall right. Why is everyone mad at Jim Cramer? The reason why people are mad at Jim Cramer is that the only people who weren't bailed out of this mess are the ones who invested in the bank's stock. Ordinary people who would have put their life savings into it expecting it to boom this year would have been shell-shocked to hear this news. Imagine losing your life savings just like that. It would be very painful to watch indeed. You could say that this guy made a genuine mistake and didn't know what he was saying. Or did he? Jim Cramer's past. In a 2006 interview, he told about the activities that hedge fund managers do just to manipulate the market in their favor. Some were technically legal and others were not really legal. He described one of the tactics he used. A lot of times when I was short at my hedge fund, when I was positioned short, meaning I needed it down, I would create a level of activity beforehand that could drive the futures. He told the host that this was a quick way of making money. He went on to explain other tactics used by hedge fund managers, which were not at all legal, but they still did it anyway. That's it for today, folks. Hope you guys enjoyed today's video. Please leave a like, and also don't forget to subscribe to the channel if you want to stay updated on all the important news like this one. We will definitely let you know if you need to be taking out all your money from your local bank. Thanks for watching, and we'll see you next time.